Welcome back, investors, to Ticker Time News. I'm Adam, and Kohl's, ticker symbol KSS, likes to put items on sale, but some private equity firms want to buy the entire company. The department store giant has been struggling with sluggish top-line growth, and inflation is expected to weigh heavily on its earnings in the coming quarters. Its challenges can be partly blamed on the pandemic, but it has underperformed its peers that are facing the exact same headwinds. I've talked about Kohl's before as a dividend stock idea during our January 13th live stream. The stock was about $49 a share, and that's a nice 28% upside. So I'm happy to see today's announcement of a takeover interest in Kohl's. Kohl's did confirm today that it has received letters expressing interest in acquiring the company. The company did not provide further details about the quote feelers it has received, like which firms are involved or what the buyout price could be. Big information. With stocks selling off one day and gaining the next, wouldn't it be great to know what the top 10 stocks are in categories like value, growth, dividend, and momentum? Well, great news. We just uploaded our top 10 stocks list for each of those four categories. That's over 40 high quality stocks ready to choose from that are constantly updated. So you always have the best names available. Click the first link in the description and become a member to get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. However, the Wall Street Journal did report that Starboard Value Consortium was aiming to bid $64 a share, and CNBC reported yesterday that Sycamore is willing to pay at least $65 a share. The press release from Kohl's notably says, quote, letters, as in plural, implying that at least two offers are in play, which backs up the reporting. The company said that it will determine the best course of action and will not comment any further. The prices report would be a nice premium for Friday's close of about $46.84, a 37 to 39% jump. Activist investors have been nibbling at the board of Kohl's to take some action for quite some time now. In fact, Kohl's reached an agreement with major investor McCallum in April of 2021 to add two of the firm's people to the board. The company has also been enacting a strategic turnaround plan by trying to rebrand itself away from its discount model and towards focusing on active and casual lifestyle products. Among recent endeavors, it reached a store within a store partnership with Sephora to launch Sephora at Kohl's in a total of 850 locations by 2023. And it partnered with Amazon to allow customers to return items, which help drive traffic to Kohl's stores. However, activist investors want more steps to be taken. For example, activist investor firm Engine Capital recently sent a letter to the board arguing that Kohl's should consider spinning off its successful e-commerce segment, KOHLS.com, which the firm thinks could fetch a $12.4 billion market cap on its own. Jana Partners is advocating for Macy's, ticker symbol M, to take a very similar step. Another potential move Kohl's could make is to monetize some of its real estate assets. Unlike a lot of retailers, Kohl's owns a lot of the real estate in which its stores sit. Kohl's could conceivably sell a lot of the land and do a lease buyback with a real estate company, potentially unlocking $3 billion in cash. But Kohl's has rebuffed that idea. Bottom line, Kohl's has been a serial underperformer. And if the stock could not move following Q3's huge beat, maybe it should consider a spinoff of its online unit or sell some real estate. What I think Kohl's should do is take the company private. making changes, then allowing the company to re-emerge as an IPO in a few years. It's just what the company needs because the market is not rewarding Kohl's with a proper multiple. However, management has been resistant to so many ideas, so it may not be advisable to keep any hopes up there. If Kohl's does remain public, the main concern for its performance is supply chain constraints. Kohl's has a good amount of production coming from Vietnam, where COVID-19 shutdowns have weighed on output. To its credit, Kohl says it took such risks into account when it recently increased its full year adjusted EPS guidance to $7.10 to $7.30 from prior guidance of 580 to 610. The new guidance computes to a reasonable PE of 8.7 times at the midpoint and a forward PE of only 9.4 times. So the stock is quite cheap, even after today's massive move. Well, that's what I think about Kohl's right now and the potential for being bought out. But I want to hear from you. What do you think about the potential takeover of Kohl's? And more importantly, what do you think about the idea of Kohl's becoming a private company, rebranding itself, doing the changes it needs to do, and then coming back as an IPO? Let me know your thoughts on that one. And remember, your comments make these videos so much better. Thank you so very much for watching, and I will see you in the next video.